Now, traders at Access Bank say they expect a relatively quiet Treasury bills market as attention shifts to today's bond auction. Victory Osarumwense, team member, Treasury Department at Access Bank, joins us now to discuss the midweek activities in the fixed income and Forex markets. Victory, thank you so much for your time today. Obviously, we're going to talk about that bond auction and your expectations, but can you just give us a sense of market sentiment right now, liquidity, and so forth?
Thank you very much for having me. So yesterday we saw the system liquidity open at 174 billion. However, there was also an OMO maturity of about 136 billion that hit the system. So this kept liquidity at elevated levels. As a result of this, the OPR and overnight rates declined to 1.5% and 1.92% respectively. As a result of this elevated liquidity, we saw the fixed income markets trade on a bullish note. Notably, the Treasury bills market was very bullish as most market participants stuck to the left-hand side of the quotes, showing bids on the medium to long-term instruments. This sentiment was sustained throughout the trading session. In addition to that, the bonds market, we also saw a mixed sentiment on the bond market, meaning that it was a mix of both a bullish tone as well as a bearish tone. Some participants stuck to the bids. We saw demand on the instruments like the 2025, the 2027s, and the 2036, which were quoted at 9.6%, 11.44%, and 12.55% respectively. So that is how liquidity has impacted the market in terms of demand. For the bonds market, we saw bearish sentiments on the auction bonds, notably the 2026 paper and the 2042 papers, where most participants were trying to create short positions in order to cover at today's auction.
Right. So let's talk a bit about the auction then. What are your expectations? Are yields likely to move north, or what do you think?
Yeah, so basically, the 2026 paper closed at 11.5% at the last auction, and the 2042 paper closed at 13% at the last auction. However, the 2026 paper has traded below 11.5. We saw it touch 11.25 at some point, and as at yesterday, it traded as low as 11.17%. As a result of this, we believe that the auction rates, is going to close on the 2026 paper is going to close at lower levels today, probably 11.2, but that is largely dependent on an interplay of where the market participants bid, as well as what happens, the appetite of the government. For the 2042 paper, that has traded at 13% levels, regardless of the time lag between the last auction and yesterday. It still maintained 13% levels, and we believe that that will still close at those levels.
All right. And what about further down the line, though? Because very often, recently I have been hearing about that expectations that yields are likely to rise. Now, obviously, they're coming down at the moment, but do you still expect later on, perhaps later this quarter, that we'll see an uptick in yields?
Okay, so I'm sure you've heard of the recent news where the president has sort of submitted a supplementary budget. So we believe that this is actually going to have a short-term as well as a long-term impact on the market, because that basically communicates an increase in government appetite. So we believe that this means that the government is actually open to borrowing more funds. And however, even though the government is open to borrowing more funds, it's going to be an interplay of both the market participants as well as the government. Another factor to consider is the liquidity that we keep seeing in the system. So even if the government is willing to take more funds, if the liquidity remains at elevated levels, we might keep seeing rates decline in the short term. We'll just keep watching that space to see what actually materializes in terms of the yield direction.
All right, a quick check on the FX markets. What are your expectations from what we've seen so far this week?
Okay, so yesterday, the FX market, we had a turnover of about $95 million. The INE rate appreciated by about 67 kobo to close at 416 naira to $1. We also saw the NAFEX rate appreciate by about 9 kobo to close at 416.21 naira to $1. We believe that this rate will continue to remain at these levels as the central bank keeps intervening in the market. They've already intervened this week in the SME and invisibles window. They've intervened also through the FPI window. We're expecting a retail auction, the retail SMIS auction on Friday, and we believe that all of these interventions will help keep rates stable at 416 naira levels, basically.